Very good morning to all of you. On behalf of Committee for Members in Practice of Institute of Chartered Accountants of India, I welcome you all in today's very important VCM on cybersecurity and evolving risk consideration in audits and audit quality checks and audit quality maturity model. In order to tackle these two important topics, we are having with us our two eminent speakers, C. Sushil Kedia and C. Amit Mitra with us. So on behalf of CNP of ISA, I welcome both these speakers. Welcome Sushil welcome Amit. So both the learned speakers are associated with CMP since long, and they have served the members by disseminating the knowledge during this pandemic by various virtual CP meetings, webinars on various topics also. So today we are having with us Sushil Kedia on this cybersecurity. I would like to share the brief profile of Sushil Kedia with all of you. Sushil brings together technology, data, business, auditing, and accounting expertise through his 20 years of post-qualification experience in providing statutory audit, internal audit, IT system audit, data analysis, ERP security, information security, data privacy, and business process control optimization. To multitude of clients, which include large Indian listed companies and multinational corporations. Apart from India, he has led different type of engagements in several other countries, including US and UK. He leads the stakeholder and digital trust services for the firm and helps his clients on audit attestation under various global standards and frameworks, where the subject matter involves information security, data privacy, etc. He is also a subject expert on ERP risks and control and has led several large-scale SAP pre and post implementation audits in India and abroad. He has been responsible for leveraging IT tools and technology as part of the statutory audit for some of the largest companies in India. He has played a leading role in developing audit technology, methodology, and approach for auditing clients' IT system and process as part of those statutory audits. He has helped many clients in automating business processes and internal controls, implementing internal control framework, and advise on internal financial control to meet the requirements of the Companies Act 2013 as well as US SOX 404 requirements. He has actively participated and involved in the thought leadership and innovation in external and internal audits to make emerging technologies like robotic process automation and artificial intelligence in integral part of the audit process. In addition to being a proud Indian Chartered Accountant, Sushil also an ICAEW UK Chartered Accountant. His professional certification including Certified Information System Audit CISA, Certified Information Privacy Professional CIWP from US, and Certified Data Privacy Solution Engineer CDPSC, ISO 27001, Lead Auditor and SAP Business Object, Access Controls and Process Controls. He has also been an Executive Development Program of leading B schools like Indian School of Business and the Wharton School, and the list is still long. So once again, welcome to you, Sushil for sparing your valuable time. Welcome, sir. We are having with us Amit Mitra also. I would like to apprise all of you the brief profile of Amit also. Amit is a senior audit partner with MSKA and Associates. His experience of more than 23 years of experience in providing audit and accounting services to domestic and international clients, including lead partner on several listed and IFRS engagements. He is the special invitee to the Audit Assurance Standard Board, a peer reviewer, and has been part of FRRG of the Institute of Chartered Accountants of India. Additionally, Amit is operating as a joint leader for professional practice group of the firm. So once again, welcome Amit and thank you very much for sparing your valuable time. So without wasting much more time, let us move towards our first session, first technical session, that is cybersecurity and evolving risk consideration in audits. So I request C. Sushil Kedia to please enlighten all of us with your expertise. Over to Sushil, please.
Thank you, Anil for introducing me. And I wish everyone a very good morning, and I hope everybody is keeping safe and healthy. So let me first share a presentation. Is my presentation visible?
Yes, sir. Yes, sir. Fine.
Okay, so let me first talk about the agenda. So today, in the next 45 to 50 minutes, we are going to talk about cybersecurity and how cybersecurity is relevant to the audits. We will understand some of the common cyber threats and also cybersecurity risk exposures. And then I will discuss about some of the possible audit approaches or procedures that one can use to address cybersecurity risks. And in case you come across any cybersecurity incident in your clients, there are some suggested procedures that may be helpful to you when you're performing the audit. So this is what we are going to cover. So let me just go to the next slide. So let's first talk about what cybersecurity is. I know in the last couple of years, in general, the awareness about cybersecurity and technology has improved a lot. One, because all of us as individuals have learned how to use technology better, including learning to work remotely from home using more of technology. That plus also organizations over a period of time now, especially in the last 2-3 years, they have significantly enhanced their adoption of technology, not only to automate their processes, but to also make sure that they can digitalize their business models. That's why cybersecurity is becoming increasingly important in India. Although I know most of you would be, having an inclination of what cybersecurity is, but just to make sure that we are all on the same page, let me explain what do we mean by cybersecurity to start with. Now, we all know that there are many companies that are implementing technologies, such as, IT systems, your networks, software programs, hardware devices, including your desktops, various type of servers, and in fact, mobile devices like mobiles and tablets and all of that. Now, all these IT systems, networks, devices, and programs, they can be targeted for cyber attacks, wherein someone can try and gain unauthorized access to these IT systems, these computer systems or hardware, and attempt to steal data. When they steal data, they can get access to the data, they can actually disable the data or destroy the data or lock the data. That is the reason companies have to actually deploy their resources in order to protect their IT systems and network. For example, they will have to implement policies and procedures. They will have to implement various technologies. And of course, they will have to deploy people who understand cybersecurity and will help them in safeguarding their IT systems and networks and devices. Now, this practice of implementing these policies and procedures and technology or deploying people to protect their IT systems, that is what is meant by cybersecurity. Another important thing to understand is when we talk about cybersecurity, we are actually focusing more on the threats which are external to the organization and not internal. By external, what I mean is external outside the network of the IT network of the organization. Whatever is considered inside the network, that is a separate subject. Again, that is IT risk. But when we talk about cybersecurity, largely we imply the threats that are coming from outside the network of the organization. Now, I just want you to pause and think about cybersecurity risk and whether you think it is real or not in today's scenario. Now, most of you, I know, would consider cybersecurity as important because our dependence on technology in today's age and day. However, if some of you are thinking that cyber threat is not real for your client, or meaning, your cyber attack cannot happen to your specific client, please think again. I will show you some of the news clippings from very recent past. These are all from India. And I will also share some statistics which will help you reflect on this question of whether cybersecurity is real as far as your own clients are concerned. So this is the first news. Maybe some of you would recollect, may have read this in the newspaper. It was, widely publicized. So this incident involves a gang which cheated more than 1,000 people by using fake customer care numbers and OTP access. Now, this was also an incident which inspired a popular web series which was released on the OTT platform, and maybe some of you would have watched it. So this is an incident where individuals, meaning people like you and me, got impacted. Now, next is a news about Cosmos Bank, which was subjected to a cyber attack. In this case, the entity which suffered the cyber attack was a private business entity. Now look at the third news clipping. Now here the impacted entity is a government entity. The billing data of a government entity was hacked by the attackers, and they demanded 1 crore ransom in bitcoins from Haryana government. Now what does all these news items show? We have a case where individuals like you and I got impacted. We have a case or incident where a private business entity got impacted, and we also have a case where government authorities or government entity got impacted. This means that the cyber risk is very much real and existing, and anyone can get impacted, including your own very clients. Now let me share some statistics with you. These statistics were released by the Ministry of Electronics and Information Technology. In 2018, there were about 208,000 odd cybersecurity incidents which were observed in India. In 2020, these cybersecurity incidents increased to 11,58,000. So notice this. There was a more than 5-fold increase in the number of cybersecurity incidents observed in India in just 2 years. In 2021, in the first 6 months, the number of incidents already crossed 6 lakhs. Therefore, the expectation is that in 2021, the number of incidents would be even more than 2020. This shows that the pace at which the number of cyber incidents are increasing, it makes the cybersecurity risk, that much more heightened and that much more real. In fact, government is actually allocating more and more funds to tackle cyber threats. Just as an example, in 2015-16, which is 5-6 years back, government had allocated around 85 crores to tackle cyber threats. In the current year, in 2021, the total fund allocation to tackle cyber threat was 416 crores. So government is also realizing the importance of managing cyber risk and diverting more and more resources to tackle it. In July last year, CERT-In, which is the apex body for cyber agency for the government, it released an alert to over 700 organizations across various sectors to enable active cyber threat management. And in fact, last year, government also formulated the draft national cybersecurity strategy. So that's the importance of cybersecurity now. Now, I will add another dimension to it. We all know that technology is rapidly advancing. And obviously, all of us would have heard about 5G. Now, 5G is expected to increase the connectivity between various systems many folds. And we are talking about rapid advancements of Internet of Things, where many different devices, even devices like your lights and fans and various other objects, might be connected to the internet, and they might be receiving and sending data. So in that kind of a scenario, the cybersecurity risk will become even more significant. And 5G is just around the corner. You may have heard that in the US, 5G has been started rolling out in the last few weeks. And I'm sure rest of the world is going to follow suit soon. In fact, we might see the rollout of 5G in India maybe within the next couple of years. I won't be surprised, right? A lot of people are working on that. Now let's talk about the relevance of cybersecurity to financial audits. And to demonstrate the relevance, let me just take a few real-life examples concerning the financial audits. The first example is regarding a technology company which suffered a cyber attack. Now, this company had patented a new technology which was stolen through this cyber attack. Now, what do you think? Will there be any impact on the financial audit? The answer is yes. In this particular example, for this company, the patent was a material intangible asset. Therefore, both management and the auditors needed to determine the impairment and its impact on balance sheet. Let us also now look at what kind of risk would an auditor or management had identified, which if plugged, could have helped contain the damage for the company. Lack of appropriate intrusion and detection controls. So if the company had appropriate intrusion and detection controls and related tools and technology to manage cybersecurity risk, that may have allowed the company to detect this kind of cyber attack early, and maybe they could have either contained the damage altogether or at least reduced the impact. So this is a risk that management and the auditor could have identified and maybe taken into account to ensure that the exposure was not much, or at least reduced. Now, another example, a company's business email was compromised. Now, if you read this, on the face of it, it may seem like normal, or at least not something which is very significant or something which would make a big headline. If you think this will not have an impact, think again. In this particular case, the business email of the company which was compromised through cyber attack, it was used to request for vendor bank account information change, and it resulted in remittance to fraudulent accounts. So just a simple problem of business email compromise can actually lead to loss of funds for the company. And if we relate this to a risk which the company should have identified, it's around lack of vendor master data controls. If the company had appropriate vendor master data controls and checks and balances around authentication of any kind of significant changes to important bank vendor master data, then probably this fraud may not have taken place. Another example, this relates to a ransomware attack. Now, in a ransomware attack, the attacker gains unauthorized access to a company's IT systems and data, and then locks or encrypts that data in such a way that the company itself is not able to access its own data. In this example, the company also did not have a backup, and therefore they were not able to recover the data. So this ransomware attack resulted in financial reporting data being deleted and that being unrecoverable. So just imagine the impact that this incident would have on the financial reporting itself. And if you look at the risk that was not addressed appropriately, it was around backup and restoration. So the company should have had backup controls where their data should have been backed up on a very routine basis. This is something very simple. Most of the companies have it, but sometimes when it is overlooked, something as simple as a backup, can be very significant or very helpful when there is a cyber incident. Now, these are just 3 examples. There can be many more such situations. Now, another aspect is the cost involved when a company is trying to manage or respond to a cybersecurity incident. Now, there can be costs related to legal fees. If a company is actually called for a forensic investigation, there could be forensic fees, costs associated with regulatory assessments. And if remedial activities are required with respect to customers or various other stakeholders, then all the costs associated with those activities. So as auditors, we also need to look at the costs which have been incurred for managing the cybersecurity incident, and whether these costs have been appropriately accounted for and appropriately disclosed. Now, there can be various types of impact on financial reporting because of a cyber incident. I am just going to talk about some examples. Obviously, these are not exhaustive. So a cyber incident may lead to a diminished future cash flow for the company. There can be significant impairment of intellectual or intangible assets. Of course, inaccurate recognition of liabilities or increased financing costs. There can be expenses relating to investigation or breach notification. There can be cost involved during remediation, litigation fees, etc. There can also be claims related to warranties or claims because of breach of contract. There can be significant cost or expense involved because of product recall or replacement that may be necessitated. Then there can be indemnification of counterparties. Even something as basic as insurance premium, there may be an impact. There can be, of course, loss of revenue. Customers may need to be incentivized. There can be loss of reputation, loss of goodwill, and loss of customer relationship asset values. These are some of the types of impacts because of a cybersecurity incident. There can be many more. Now, when we talk about cyber security in the context of audit, it is also important for you to understand what are the common cyber threats. Now, while I will not go very deep into technical terms, but at a high level, I would like to explain what are the various categories of cyber threats, which will be helpful for you to understand. If you were to try and address the cyber risk for your audits. First is the malware. Now, malware is a type of cyber threat where the hacker actually uses a malicious software or a program code. Now, typically, a user is actually tricked into downloading or clicking on a risky software or file. The user would probably think that, that file is normal or the attachment is normal. But as soon as the user clicks or opens that file, which is actually a malicious software, it would get installed on his or her system. And slowly, if it is not contained properly, it can spread to the entire network of that company. And it can impact most of the applications and almost all of the users. So this type of cyber threat is very common. There are various categories, subcategories even within malwares like ransomware, viruses, spyware. These are technical terms. I'm not going to get into details, but in general, you just need to know that these are malicious program codes which can be inserted into the network, and then through that, access can be gained by attackers. Now, two of the famous incidents which have happened in the US, again, you may have read about it in the news. These have happened in the last couple of years itself. One is the University of California. The attackers gained unauthorized access to the personal data of the faculty and students in the University of California. This happened in 2020. And in fact, the attackers also sent emails to several students stating that their personal information has been compromised and would be made public. Another very famous incident which happened last year was on Colonial Pipeline. Now, Colonial Pipeline is a US-based oil pipeline network which services various states in the US. Its impact was huge. Because of the cyber attack, the computerized equipment which was used to manage the operations of their oil network, it had to be stopped. So much so that a regional emergency had to be declared, covering several states in the US. They were forced to pay the ransom. It's another matter that subsequently half of the amount that they paid, they were able to recover with the help of the authorities. But the impact was so huge that it resulted in the government declaring a temporary emergency in the states. Now, the second one is man in the middle attack. This is also called eavesdropping attack. So in this type of attack, the attacker would actually interrupt the traffic when two parties are either having a transaction or a communication. And then using eavesdropping, the attacker would actually filter data and steal that data away. This is also very, very common. The third type of cyber threat is denial of service attack. In the denial of service attack, the attacker would try and gain access to the IT systems, servers, and network of the company, and use a method in which they would flood the traffic to that server or network in such a way that it would completely exhaust the resources and bandwidth of that server, which results in the suspension of operation of that server or network. Now, several times, you may have heard that when user goes to a website, they would see a message on the website that the website is temporarily out of service. Or worse, it can display a message which is left by the hacker on the website, right? So this type of attack is called denial of service attack. Now, very recently, in fact, about 10 days back, Ukraine suffered a series of cyber attacks. Now, a number of their government websites were hacked, including the websites of Ministry of Defense and also the website of Ministry of Foreign Affairs. These websites went down and malicious messages were displayed on those websites as posted by the hackers. Now, there's a lot of controversy currently going on, and there's a lot of politics between Ukraine and Russia, which is happening, even involving this incident. Zero-day exploit. Now, in a zero-day exploit, the hackers actually exploit a vulnerability which is already existing in a particular system or network. So these vulnerabilities are actually right there in the system right from day zero, which means when the software or the network is getting developed, at that time the vulnerability existed without the owner of that network or the software knowing about it. As and when the zero-day vulnerability is known to the vendor who's owning that software or network, or if there is any alliance which actually manages that network, then a patch or another solution, usually a patch, is actually released by the vendors. And this patch needs to be implemented by all companies who are using that network or hardware or software. Now, it can always happen that there can be a delay between the day the patch is released and the day the patch gets applied by various companies. During that gap period, these vulnerabilities will always be available for exploitation by hackers. And when they do that, it's called a zero-day exploit type of attack. Now, some of you may have also heard about Log4j. Now, this has been going on since last 2-3 months. Log4j is a Java-based open source program, which is very widely used. This program is used by many companies worldwide, including India, to manage the logging of the activities for their servers. Right? In fact, I have a client, and they took about more than a month to assess the impact of Log4j vulnerability because they were not sure where this program was getting used. So ultimately, they identified that more than 100 of their servers and applications, had an impact, meaning this vulnerability existed, and slowly they were able to identify and then apply the patches to actually plug that vulnerability. But during that period, they were exposed to this type of threat, although they were on very high alert. Thankfully, nothing happened. There was no attack because the company was alert. But this is one of the very recent and very significant zero-day exploit, which is being talked about last 3-4 months. So we've talked about some technical terms like malware and all of that. There is another form which the cyber attackers actually use, which is called social engineering. Now, in social engineering, the attackers would use social means to try and gain access to information. So two of the most common type of social engineering is email phishing and spear phishing. So in email phishing, the attacker would send malicious emails which are designed to deceive the recipient into believing that they are genuine, the requests are genuine, and they trick those recipients into providing sensitive information, or they trick them into clicking a link or downloading a file which are actually malicious in nature. It could be virus or a spyware, etc. Right? Spear phishing is like a targeted phishing where the attacker would pose like a very high level executive, like a CEO, right? So this type of attack is more personalized. So the attacker would actually impersonate the CEO of a company and send email to someone to either get access or to divert funds or do something malicious. Now, similar to emails, there could be calls or texts or chats, which can be used in the phishing attempts, where the attacker spoofs the phone numbers and which then appear to be legitimate to whoever it is being sent. Now, let me also talk about some of the common cybersecurity risk exposures. There are 4 or 5 of them. Let me take each one of them individually and spend a little more time. The first is entity level information and communication. In this type of risk exposure, the cyber attacker would pose like a company executive or a vendor representative, and then they would send instructions to transfer funds to inappropriate accounts, to fraudulent accounts. Generally, those instructions are sent using compromised email IDs. Now, there are large companies like Google and Facebook. Even these type of companies have been exposed to entity level information and communication risk. Between 2013 and 15, both Facebook and Google, they were duped to the tune of $100 million by an attacker. What happened is they both of them used a common vendor which was based in Taiwan. A cyber attacker posed as that vendor and sent fake invoices to both of these companies, and these companies made a series of payments over 2-3 years, which resulted in a huge loss to them. This fraud was, when detected later on, the hacker was actually arrested and extradited. In another incident, again a US based company, the attacker posed as a CEO of that company and sent a communication to the CFO of that company to do fund transfer to the tune of $50 million on the pretext that he was trying to close a secret acquisition. So the CFO allowed a number of fund transfers to a specific account, and then the company came to know about this fraud only when the authorities alerted them regarding this. Vendor setup modification. In this type of risk exposure, attacker can pose as a genuine vendor representative or authorized vendor personnel and request for changes in the vendor bank account or some other sensitive information. Wire transfers. In this type of risk exposure, an attacker can pose as a financial institution and request for disbursements, which may be related to business transactions or vendor payments. Next is intrusion prevention and detection and the monitoring of it. So if the company does not have appropriate intrusion detection mechanism, they may be targeted to ransomware attacks, spyware attacks, malware attacks, and they may lose data, and it may lead to loss of money. Patch management. We've talked about zero-day exploits. There can be a number of vulnerabilities. In fact, you would be surprised that the number of vulnerabilities which exist in various softwares, as and when they are detected, patches are released, and the people who are using those apps or software or devices, they need to apply that patch. If they don't, then such vulnerabilities can be exploited, which may lead to exposure. Now, as individuals also, when you use apps in iOS or other devices, you would notice that the apps very frequently would release upgrades. Now, a number of times these can be minor upgrades for performance improvement and bug fixes, but many times actually these upgrades are there because the vendors or the owners of those apps, they realize that there was a vulnerability and they release upgrades or patches to fix those vulnerabilities. Backup and recovery, of course, in this type of exposure, if a company does not have a backup and there is a cyber attack, and either their data is deleted or logged, in that event, then of course they cannot recover their own data. Let me also talk about a little bit about the standards on auditing. Right? So we all know that SA 315 requires the auditor to identify and assess the risk of material misstatement, and this is done by understanding the entity's business and the overall environment. Now, while there is nothing specifically elaborated as far as cybersecurity risk is concerned in this essay, but we all know that as part of the overall assessment of the risk of material misstatement, we also need to understand how the company is using technology and regarding the entity's IT environment as well. So there is a natural inference that we should also look at cybersecurity risk. Now the question is, can a cybersecurity risk or a number of cybersecurity risks collectively lead to a material misstatement, risk of material misstatement? The answer is yes. There can be specific situation where the cybersecurity risk can be considered to be a risk of material misstatement. Of course, it depends on the situation, circumstances, like the industry in which the company is operating, the business model of the company. For example, if a company is using commercial websites and almost all of its transactions are happening through that website, that may mean that there is an increased cybersecurity risk, and there could be a cybersecurity risk which may also lead to material misstatement. So what do we do then? We should look at some of the risks related to cybersecurity and then determine whether these risks apply to that particular client, and then decide whether we should consider cybersecurity risk as a normal risk or a risk of material misstatement. Some of these risks include the risk of data breaches, which may impact financial reporting applications, including maybe if the company has digital assets, patents, copyright materials, trade secrets, etc. We should look at the possibility of the risk of unauthorized access to the overall IT environment, risk of the potential inability to access the data if there is an attack, risk of system failure, and the impact on the main business of the company. If everything is digital and if there is a system failure, then what happens? Will the company be able to carry on its business? Will that not have a material impact? And risks arising from the absence or lack of policies and procedures with respect to cybersecurity. These are some of the examples of risks that we may need to consider in relation to cybersecurity risks to be able to determine whether, if at all, there could be a material risk of material misstatement in relation to cybersecurity. Now we've talked about the common cyber threats and common risk exposures. Now, what do we do about them in the audit? So I will discuss about some of the common audit procedures that we can use to identify and address cybersecurity risks. These are only examples, and of course, you may have to look at each situation individually and see what additional procedures may be necessary. First of all, we have to understand the various cybersecurity roles and responsibilities within the organization. Now, if an entity has to identify and address cybersecurity risk, they cannot do it if they've not identified someone with overall responsibility of cybersecurity. Most likely, it would be the CISO, the Chief Information Security Officer, who would be entrusted with this responsibility. Sometimes the CIO doubles up as the CISO also. Irrespective of the designation and the name, the most important thing is to make sure that someone has the overall responsibility for identifying and managing cybersecurity in that company. Not only that person, but even his or her team members, their roles and responsibilities should also be clearly defined. Second very important aspect is around the discussion of the cybersecurity topic or risk at a boardroom level. So you may have to consider whether the entity is actually looking at cybersecurity when they look at their overall risk management at an enterprise level, and whether that is a topic for discussion with those charged with governance. For most of the companies where the business model is such that there is a heavy dependency on technology, I would expect that cybersecurity would be one of the key topics that gets discussed at the boardroom level, with the CEOs, with the board members, etc. If that is not happening, it may lead to a increased risk for the company. Similarly, if there is an entity which has digital assets, which are material, then they should also have a process of identifying those digital assets and understanding the impact if there was a breach or compromise. And they should also have a process to monitor whether there was any unauthorized access concerning those digital assets. Next, we should also look at the entity's process to monitor, detect, and disclose incidents. Now, most of the forward-looking companies today have what we call a cybersecurity incident management plan, or just an incident management plan. So that plan should have procedures around how the company will identify the cybersecurity incidents, what happens when the incident is identified, how would they contain the damage, how would they respond to the incident, and whether they have procedures in place to actually also communicate regarding that incident to various stakeholders. If they do not have a plan, incident management plan, then that itself is an indicator that there is something wrong, and an indicator that the risk is heightened in their situation. Similarly, they should have processes to identify risk factors in relation to cybersecurity disclosure with their stakeholders. Now, another very important aspect that an auditor should consider is the entity's risk assessment process, specifically with respect to cybersecurity risk. Things like whether the company conducts periodic risk assessment to identify the risks on the possibility of data breach, on the possibility of unauthorized access to their IT network, on the possibility of loss of data and their inability to access the data if something happens, the impact IT system failures could have on their business, and the risk arising from lack of policies and procedures which may not be sufficient to address cybersecurity risks. So this all should be part of their risk assessment process. If the company has material digital assets or copyrights, then we should also look at whether there is a process they have for periodic review of those information assets or digital assets. Things like how do they identify digital assets, whether they can classify or prioritize assets based on the sensitivity or the value to the business. Periodic review of the network itself in which those digital assets reside, that should also be covered. Then we should also see the linkage of cybersecurity risk with the internal controls over financial reporting. Now, the cybersecurity risks would need to be addressed through controls, and these controls may also be relevant for financial reporting. So we should look at whether the company has identified risks and implemented controls around recovery of data, around things which impact revenue recognition, sometimes maintenance of personal information, etc. When the company is performing the risk assessment or has performed the risk assessment, then of course they need to have an action plan. How do they address those risks? The risks cannot remain unaddressed, otherwise they will get exposed to all the cyber attacks and various type of issues. So what most of the companies are doing now, they are adopting some of the global frameworks. You may have heard about ISO 27001, which is one of the global standards which helps company adopt good practices in relation to IT and information security. Similarly, there are about 17, 18 global standards. Another one is NIST, which is National Institute of Standards and Technology in the US, which also has a global framework, which allows companies to adopt practices in order to respond to cybersecurity risks. Apart from implementing or adopting some of these global standards, the company should also have a process to assess compliance with its policies, on a very routine basis, something like on an annual frequency. And then if a cybersecurity incidents occur, then do they have a process to identify and manage litigation costs, costs related to regulatory investigations, remedial actions, etc. And last but not the least, you may have to consider the industry and the circumstances and the business model in which the company is operating. If the company has a business model where they are too dependent on technology, for example, if they have a commercial website and most of their sales transactions are actually passing through those commercial websites, then the risk of cybersecurity for such kind of a company may be significantly higher than other companies. So you have to look at the specific entity, their business model, industry, and then understand whether in their particular case, cybersecurity risk is more or just like any other company. Now, let me suggest some of the controls. Again, these are illustrative in nature. There can be many other controls which may be very specific to the risk identified by your particular clients. But I will talk about some of the common ones. One of them is around the review of policy and procedures in relation to cybersecurity, which is at an entity level. Another can be security awareness training program for employees. Now, we've talked about the social engineering type of cyber attacks. Now, those type of attacks usually happen because of lack of awareness amongst individuals or users. Awareness around not to, open or click an attachment if the source of that email or attachment is unknown. This is a very, very simple control, but can have or can go a long way to actually mitigate the risk of social engineering type of cyber attack. Then there could be controls around periodic risk assessment of critical vendor information, review of policies around fund transfers and cash transfers, uh, review of intrusion detection and prevention tools. There can be vulnerability scans. So many companies today, they get what we call vulnerability assessment and penetration testing, in short VAPT. They get this done where the person performing the VAPT will actually pose or behave like a hacker and try to identify and exploit all the vulnerabilities that might exist in their client's environment. This way, the client is able to identify any gaps which may be there, and then plug them before a hacker actually exploits them. So these are some of the illustrative controls, and of course, your client may have some other specific controls depending on their scenario. Now let's talk about what to do if a cybersecurity incident is identified at your client when you're performing the audit. First and foremost, you will have to understand about that incident. It is not necessary that each and every cyber incident will have or could have an impact on the financial reporting. Now you have to understand, what was the incident, how did it happen, when did it happen, did it impact IT systems and applications which are relevant for financial reporting, or did it only impact operational type of applications? So you will have to request for detailed information from client, and then along with management, you may have to analyze all the information that you have received and then determine whether there could be any impact on the financial reporting, including internal financial controls. And of course, whatever procedures you perform, depending on what is relevant, you will have to also document your audit response. Here, I would like to talk about some other important considerations when there is a cyber security incident at your client. Usually, the company would carry out an investigation when something happens, right? And the people who carry out that investigation generally follow an approach which includes 4 or 5 different stages, which we call detect, assess, respond, and recover. So maybe as auditors, we can also take the same approach. So for example, under the detect phase, we can understand what is the type of incident, whether any financial reporting systems were impacted, whether any data was compromised, what was the timing of the incident, and how did management come to know about it. During the assess stage, we could look at what management is doing to assess the entire incident. Have they deployed an internal team, or have they asked a third party to do the review? Sometimes they may have to carry out a forensic review. So if a forensic review is performed, or any other review is performed, we should definitely ask for the report, right? Such type of reports would have all the details. It would have the timing of the incident, how it happened, where it started, what is the impact, which systems were impacted, how the damage was controlled, and how the company responded to the incident overall. So such detail is extremely useful for us to also analyze the impact on the financial reporting as auditors. Under the respond stage, we can look at whether the company had an incident response plan and whether it worked. We could also assess whether there were any costs associated with responding to the incident, and whether they were material to the financial statements, whether they have been appropriately accounted for, and so on. Under the recover phase, we could look at the overall impact on the financial statements, including if any data was compromised, whether the data was recoverable, whether all the data that was hacked is now complete and accurate, have not been modified. And also we need to look at whether this incident points towards deficiencies in internal controls. Most likely they will. So we also need to determine whether such deficiencies actually would impact the opinion on internal controls over financial reporting or IFC. So these are some of the important considerations that you can look at when responding to a cyber incident with respect to the audit. This is one of the suggested approach. Of course, there can be many other. Sometimes it can get too technical. So in that scenario, you may also want to involve a cybersecurity expert to get more information, and certainly that would also help. So I would just pause here in the interest of time and see if we are taking questions. Anilji?
So there are 2-3 questions for you.
Okay.
Sir, first question is very general question. They are asking, sir, can you please provide some tips to reduce the risks?
Okay, so I have covered about some of the risks already in the later part of the presentation.
Yes.
Most important is to actually do a complete walkthrough, right? Just like we would, when I talked about SA 315, we discussed about understanding the entity's business and its environment. Similarly, we have to perform exactly those procedures also with respect to IT. So we have to look at the dependence of the company on IT and understand its IT environment, and then see whether the company has risk and controls which specifically focus on IT. So you may need to have some expertise on IT itself. For those who are interested, I would strongly recommend that you do the DISA course that the institute has to offer if you've not already done that. And there are some other courses in the digital learning hub of ICI, like the one on refresher course on cybersecurity, right? So I would recommend you to start from there. Maybe go through and do DISA. That will certainly help you to identify those risks and try and address them in the audit.
Yes. So what are the biggest cybersecurity threats right now?
See, a lot of people are working from home, right? Which means the network of the companies have expanded, right? If you are sitting within the office of the company and you're doing your work, then you are part of the you're part of the internal network of the company, and there are many checks and balances that the company would already have. When the pandemic started, suddenly everybody had to start working from home, right? I know of companies who had to ask their employees to work from home using their personal devices because there was no other option. Otherwise, they had to stop the operations, right?
Yes.
And they knew they were taking risks, right? So they did not have controls in place. They did not have something like a virtual private network to connect safely to to their office network and all of that. They tried and used different other means to remain alert regarding the risk and make sure nothing happens. But one of the biggest risks today is the fact that people are working remotely, and the other bigger risk is that now we are using our own devices. For example, we normally use our phones and iPads and other tablets and personal laptops to do both our personal work and the office work. Good companies which have better cybersecurity practices, they have implemented software and means and mechanism to make sure that the risk is addressed. But there could be many other companies which may not have considered these risks.
Yeah. Yes. So, is there any standard on cybersecurity?
Unfortunately, we don't have any standard right now. But the way things are evolving, I'm sure we will see more and more literature in times to come.
So how can one person come to know that his email is hacked? Suppose an email has been hacked and customer pays the supplier actually it is a hacker, does the customer has any remedy of what action can the customer takes?
Yeah, absolutely. So two things. First, you may not know that an attack has happened until you come to know about your loss, right? Suppose in this case, if a fund is diverted, to another account than a rightful vendor account, then obviously when you're doing the reconciliation, confirming the balance, you will get to know that there is something wrong, right? At other times, if you follow good cybersecurity practices, you may have the tools already in place which will help you detect as soon as somebody is trying to intrude. You may have a intrusion detection tool which will help you detect that somebody is trying to intrude.
Yes. So these were the questions for you. And thank you so much for spending your valuable time, sir. And it was a wonderful deliberation. And we have gained a lot for your deliberation, sir. Once again, thank on behalf of CNP of ICI, I extend my heartiest thanks to you, sir. Thank you so much, sir. Thank you.
Thank you. Thanks to all the participants for being there, for joining the VCM. And I hope everybody will remain safe and healthy. Thank you.
Thank you, sir. Thank you so much. Thank you. So moving towards our next session, the quality check in audit as well as the audit quality maturity model. We are having with us the eminent learned speaker, CMF Mitraji. So I request Amitji to please start his deliberation. Over to Amitji, please.
Thank you, Anilji, and good afternoon to all my colleagues, all my friends. I'll just put my PPT.
Yes, sir.
Anilji, is it visible?
Yes, sir. Yes, sir.
Okay. Okay. So, frankly, there is nothing really new that we are going to deliberate today, but but all these components have gained significant importance in our today's world, considering the regulatory environment around us, how things have changed, let's say in last 3 years or 4 years or 5 years. And also what we have seen is that the expectations from the stakeholders, be it regulators or be it the investors, the expectations, is there a mismatch, or do we need to uplift the quality? Is there a yardstick in terms of quality, or are we left down to only the standards on auditing? And then from our firms level, audit firms level, what are the challenges that we are facing, and then how do we uplift, how do we come out of that and enhance our audit quality? And then finally, there is this audit quality maturity model, which has been introduced by the Institute of Chartered Accountants. Version 1 is already out, and currently it is recommendatory in nature. But then what has led to this? I mean, from, let's say, from 1949 when the institute was established to now, and how's the environment across the world moving towards the measurement of audit quality, especially in an Indian scenario, what has actually led to this, and what are we expected to do out of this? This is all what we are going to kind of deliberate today. And as I said, there is really nothing new, but it is a reiteration of the fact that these things have been picked up by the regulators. So as we speak, there are, who are our regulators? I mean, there is a NAFRA, there is the disciplinary committee by the Institute of Chartered Accountants. Then there is SFIO. We get, sometimes we get notices from CBI or SBI, SEBI, or RBI inspections are there. And then Institute also performs reviews in the form of peer reviews or FRRBs or QRB. So with so many regulators, and with so many, let's say, for the lack of better word, people who are hounding on the quality of the auditors, how are we performing there? And then is there, and then how is it further impacting, let's say the future of auditing in India? Now, so one of the thought process, what we've always been saying is that there is a mismatch between what we have been performing under standards of auditing, and then what have been the expectation of the stakeholders. But heart on heart, do we really believe that there is the entire, let's say, blame is to be given to a mismatch, or do we believe that we need to uplift our quality for the audits, and is there a need for us to be more consistent? That is the question being asked, and let's say it's a self-assessment question what institute want us to address upon. Now, before we come down to that, I mean these are the top observations which picked up from QRB or the peer review, and in few cases from NFRA. Last 2-3 files what have been reviewed by NFRA. So you would see all these things are basic general auditing lapses. There is really nothing new which has been put on the screen. So there have been cases where auditors have missed out to identify the going concern issues. This is quite prevalent and this is quite common, and really nothing new. The standards are available, the implementation guides are available. There is enough information available on how to address what are the auditor's responsibilities on this. All those informations are already available. Then impairment testing was not found to be appropriate by a few of the regulators. Non-compliance of SQC1. Now, SQC1 standard has been there in the foray for quite some time. It is a standard which governs the quality of the firm. It is a standard which acts as a guide to the roles and responsibilities of a partner, of a quality review partner, what are the kind of documentation needs to be done. It is a Bible for any auditing firm. And now the time has come for us as practicing chartered accountants community to ensure that we abide by SQC1, we comply by that. And just an FYI, even the SQC1 will soon be replaced by ISQM1 and ISQM2. So, but as we step up to ISQM1 and SQM2, we need to ensure that we first comply with SQC1. Then there were certain observations where we noted that wrong facts were certified by chartered accountants in their certificates. They found non-compliances of standards on auditing and non-compliance of accounting standards also in many cases. There have been situations where Schedule 3 disclosures were not appropriate. And if you see the Schedule 3 and now the revised Schedule 3, it is quite elaborate and quite detailed. And then even I think yesterday or day before yesterday, guidance note was released. If one wants to fix all these issues or all these observations, and there is enough guidance, there is enough material, there are e-learnings available on the institute. So I think time has come for us to ensure that we are able to fix all these quick fixes. Then there have been issues on the CARO side where the adequate responses have not been given on the CARO. The auditors have missed out on the external confirmation not obtained, which is kind of mandatory as per standards on auditing in many cases, like our AR. Then physical verification was not observed by an auditor. Now these are all very, very basic things. So all in all, nothing really new which have been picked up by the regulators. It is all basic. It is all given in the standards on auditing. It is all given in the SQC. It is all given in the Companies Act, the Schedule 3, and all those areas. The regulators also picked up certain softer aspects. Let's say in one of the files in which NAFRA reviewed, they said that the roles and responsibilities of the engagement partner was not clear on the file. Now, again, this is something very, very basic. If the role of engagement partner is not clear on this, how are we going to demonstrate that the audit function was actually done? Excuse me. Then audit team was not able to demonstrate the work done and that the adequate time was spent on the audit engagement. Now, these are the softer aspects. I mean, you won't find probably a standard governing as to how much time is required to be spent. But then if you're not able to demonstrate anything at all, if the audit team is not able to demonstrate the work done through the documentation done by them, and that is the reason we say that we need to document whatever work we do, because tomorrow at the end of the day, the documentation has to stand up in the court of law and speak for the auditors as to adequate work was done. And these are real observations. These observations have been picked up from various regulatory reviews, primarily NFRA. Then review by engagement quality reviewer was not done, though a quality reviewer was appointed, but the team was not able to demonstrate that quality review was deeply involved in the audit, either through a timesheet or through the review proofs or review sign-offs or things like that. It was not documented at all. And then in few cases, the independence requirements of the team and the firm were not clearly demonstrated, were not adhered to. There were non-compliances of section 144 noted, which the audit team believed that they were in compliance with, but regulators were of the view that the independence requirements was not adhered to anything, and that there were conflicts, which means that non-audit services were rendered by the audit firm. And then a few of the regulators also commented on the poor quality of auditors' judgment in terms of what stand they took, or let's say where the professional skepticism was not fully demonstrated. So this is the background of where we are coming from till the which has actually led to the setting up of AQMM, because this is all what you're going to find in the benchmarks for the AQMM. Now, how is the environment changing? Let's say how an audit was done, let's say 6 years ago or 10 years ago, to an audit being done now, and what we expect audits to be done in the going forward. So there is obviously a technological revolution, huge technological revolution. We just heard a wonderful session from my friend Sushil. I mean, today with the increase in the volume of business, cybersecurity is a real threat, is a real risk, and then it has to form part of the audit planning. It has to form part of our audit strategy. So there is this technological revolution, which we as auditors also need to have those relevant tools to understand the transaction first, and then to audit those transactions. Increase in the volume, the companies are expanding left, right, and center, both nationally, domestically, and internationally. And as auditors, we need to ensure we pick up the right amount of sample. We understand the business. We have comfort on the completeness. We have comfort on how the transactions are being recorded. So this increases the complexities. This has increased to a larger extent as compared to, let's say, 5 years ago or 6 years ago. And then time and information has become now more sought after. We have a limited time to perform the audit. What work do we perform in the form of an interim audit? What work do we perform in the form of limited review? What work we carry forward subsequent to the year? And so all these things have now become so important, so critical, because time is of an essence right now. And then expectation of the stakeholders, I've already covered. The stakeholders probably, I mean, we continue to increase the pages in our auditor's report. A normal auditor's report, including CARO and IFC, probably done in at least 8 to 10 pages. This is the kind of auditor's report what we issue in India as compared to a true and fair one-page report in, let's say, in the US or in the UK. But still, the expectation of the stakeholders continues to be different from than what we actually do. So this is something which needs to be addressed. And then obviously increase in the corporate frauds. corporate frauds continue to increase, which continues to add pressure onto the auditing community. So this is the way the environment is slowly changing. A, and then B, we have the regulators who've been very actively reviewing our files. So with these two things now, therefore, there is a need to raise the bar on quality of our audit and ensure that we are able to demonstrate that. Now, how do we demonstrate that? This is the background where we now shift to the need for the AQMM. But before we reach to that, irrespective of what we've discussed up till now, we are a small, SME audit firms today, they continue to face certain challenges. I just thought that it will be better to put it here before we finally jump to AQMM. Now, I think the biggest challenge that small and medium audit firms are facing is that there is an ignorance of the fact that nothing can happen to me or no one is watching me and I can get away with it. And most importantly, I will do the documentation later on. Let me first do the audit and I will do the documentation. I will collect the documentation from the client. I don't think this strategy is going to work anymore. And then at the end of the day, we'll have to cover ourselves first by having adequate and enough documentation in our file, and the files needs to be prepared to be able to demonstrate the work done in a worst case scenario. And as they say, ignorance is no bliss. So this is, I think, one biggest challenge that our small and medium audit firms are facing, is the realization of the fact that no one's watching me, and then we will be able to get away with it. So that is not going to happen. And then there are other softer challenges like human resources challenge in getting good people, and especially people who have a knack of performing audit. It is very hard to come by, especially in a medium and small audit firm. There is a huge attrition. We train the people, and then those people generally move out to industry or to other firms and all. And then the right team composition is also extremely important. I mean, and this in spite of wanting to do this and to address this, sometimes the audit firms are not able to do it because the adequate skill set people are not available with them. And then also what we've observed is that they don't read enough, they don't update themselves. The trainings available to the people are not adequate. Now, there is a relevance, there is a reason why I've kind of put this slide here, because I want all of you to appreciate that these challenges were noted by the creators of AQMM and the institute, and they all deliberated, and then they thought that fine, we're going to kind of put this in a kind of a mark sheet where we recognize that all these things are there, but then these things needs to be fixed if we have to do the attest function. So continuing with the challenges, advancement in technologies, I think we've discussed and deliberated there. With the increase in the size of our clients' business, there is no way out of it. We need to enhance and adopt to the latest technologies. There are certain slides in my PPT which will talk about what kind of technology we are looking at. Then consistency in quality. So this consistency is extremely important, and this is no rocket science. I know it is dependent on the kind of human resources that we get, but we could still need to ensure that we are able to make it consistent by having a library of resources. Resources could be through Institute of Chartered Accountants with all the guidance notes and all those information available, or the other resources in the form of templates and all, and checklist. And then continuous training is one thing where, as we have already covered, needs to be fixed. And we also talked about adequate fees where we face challenge. And this could also be one of the biggest dampener in terms of not giving a consistent quality. But I think as a professional and as leaders, and it is also mentioned in SQC1 somewhere, once you pick up the assignment, then the leaders and the audit firm will have to ensure that adequate quality is ensured irrespective of the kind of recoveries we make. So which takes us to the point that are we spending enough time in terms of acceptance of a client? I know these are challenges, but and these are generally compromised because of fear of losing client, which leads to a weak acceptance procedures. But at the end of the day, I think time has come where we need to focus on adequate recoveries, on adequate fees, so that our acceptance procedures in turn could become very, very strong. And then the independence of the audit firm, the small audit firms generally do not have an option, and then they end up doing the attest function as well as the non-attest function and everything, which is completely impairment of independence. So one also needs to ensure and fix this issue. Now, with all this background, let's see what this audit quality maturity model is. Okay, to begin with, this is recommendatory in nature, and the council will probably take a call after a year or so, and I think year will lapse in July or August of 2022. So the observations noted and what we've just discussed in the last 20 minutes or so, plus the softer aspects needed in performing a good quality audit, plus the challenges faced by the CA firm and the regulators' expectation. So all these are summed up to form the basis of AQMM, which is a kind of a yardstick to measure the quality of an audit firm. And this is what the background material says. If you look at the audit quality maturity model background, it says the audit quality maturity model is a capacity building measure initiated by ICAI, and the objective of this evaluation matrix is for sole proprietors and audit firms to be able to self-evaluate, which means no one is going to come and do a marking for you guys. You will have to do a self-evaluate the current levels of audit maturity, and we will come to what evaluation will be, and then identify areas where competencies are good or competencies are lacking, and then develop a roadmap for upgrading to a higher level of maturity. So 2-3 important things. A, it is recommendatory in nature right now. B, the model, the way it is designed, the council will have a relook probably in the month of July or August when 1 year will elapse. C, it is a self-evaluation model. Right? Now, with this background, and also 2-3 things important. The base of AQMM continues to be SQC1 and SA220, which is the quality control of firm that performs the audit and reviews of historical financial information and other assurance and related services. And so these two would form the basis of what is going to come up in the framework. And along with that, they have coupled with the ethical team behavior, certain softer aspect, and also they've added compliance with the quality control policies and procedures within the firm, compliances, and then how the appropriate audit reporting is based on, and then whether the audit firm is responding or reacting to various audit reporting situations, whether it needs a qualification or it needs an emphasis of matter or it needs a disclaimer or an adverse. So all these things would be adhered to. So sincere advice that all of us must go through and have thorough knowledge of SQC1. We should have thorough knowledge of SA220, and also the peer review manual would be extremely important for us to appreciate the maturity model. Okay, so recommendatory in nature is what I've already discussed, and also one of the criterias that has been mentioned therein is that where at least 50%, or let's say more than 50% of the revenue has come from the audit and insurance services, and it has been consistent for over 3 years, is considered to be an audit specialized firm. Obviously, then there are certain exceptions. One of the exceptions is where the acquisition of the firm or group of professional has taken place. Then you would have this criteria won't apply. But in a normal situation, audit and assurance services more than 50% consistently over 3 years will be considered as a firm specializing in audit, and hence the AQMM version 1 will be applicable. So a firm having audit assurance services less than 50%, this is not applicable. Now another coverage restriction in AQMM is that currently it is, let's say, it covers only the listed entities or the banks other than the cooperative banks, and except multi-state cooperative banks, and it covers the insurance companies. So to begin with, these audit firms who are catering to these three categories are only covered in the AQMM model, which means an audit firm who has listed clients or who has bank audits or who has insurance company audits are primarily covered. One clarification, audit firm doing only branch audits of a bank are not covered for the time being. But because this is recommendatory in nature, it is always good to check as to where the audit firms are currently standing in the benchmark. Okay, so this is the grading which has been prescribed. The AQMM has been divided into, so what is AQMM? AQMM is a set of questions, and certain questions are categorized into three main chapter headings. First chapter heading is practice management operations, wherein each question has been allotted some marks. So total marks is 280. The second chapter heading is human resource management, again 240 marks, and then practice management, strategic and functional areas, 80 marks. So on an overall scale of 600 marks is what they have divided. But from our perspective, I think, especially from this call's perspective, the important thing is what is sitting inside these three broad areas. The categorization of marks is easily available on the AQMM platform. You could Google it and you could get it. So the focus that I've kept here is on the areas covered under practice management operations, areas covered under human resource, and practice management strategic and functional areas. Grading, now this is important, and again this is all self-assessment as we mentioned. So level 4 is the highest category of the firm. So level 1 is where you get at least 25% in each section. And so if you are in the level 1 category, then it indicates that the firm is very nascent and will need to take immediate steps to upgrade its competency, or will be left lagging behind. Okay, if it is between 25 to 50%, then the firm is categorized under level 2. And then the description it says is that the firm has made some progress, will have to fine tune further. And if it is between 50 to 75, it says firm has made substantial progress, but it will still need to fine tune further. And if it is level 4, which is above 75% in each of the three sections, now in that case, the firm has significant adoption of standards and procedures, however, should focus on optimizing further. Because quality optimization, there is no end to quality optimization. It is not that you reach to a particular level and then you stop focusing on quality, then you start declining. So it's a journey. I mean, it's not a destination. Okay. Now, one word of caution. What they've given is that I mean, it could tantamount to advertising. It could tantamount to solicitation. So the institute is very, very clear that the status should not be published or mentioned by the audit firms on any public domain. These are extremely clear. This is a self-assessment tool just to ensure and measure the quality of the audit firm. You cannot publicize this. You cannot mention this in any of the public forum. So what is not allowed? On any professional document, you can't mention your rating, your scores. You can't mention this on your visiting cards or letterheads or on signboards. You can't disclose it on the website also. However, it may be made available to anyone on a specific pull basis where the prospect wishes to see the said status. Then in that case, it may be provided to the prospect on a one-to-one basis. So this slide is extremely important because otherwise this could be misused for solicitation purposes. Okay, very quickly on the criteria. The practice management, as I said, it constitutes of 280 marks. So there are certain areas where the audit firm needs to grade themselves. So one is the workflow practice manuals, where the presence of audit manuals containing the firm's methodology, whether these are available or no, and whether those practice manuals are in compliance with standards on auditing, or whether there is enough manuals available for the compliance of accounting standards. There are advisories issued within the firm to enhance the audit quality, primarily whether there are templates available for presentation letters, whether there are templates available for engagement letters or significant working papers or audit reports and all. So whether there is guidance available within the audit firm in terms of these criteria. Quality review manuals or audit tools. So quality review manuals would primarily include the checklist and also the guidance in terms of compliance with the standards on auditing. What is the procedure that the firm follows in terms of acceptance of a new client, and we will cover certain criteria in next slide. There are a checklist on performance of audit for compliance with auditing and accounting standards, this we've covered. Then are there enough documentation standards or guidelines available for the audit team to document the business understanding of their client and the control environment of the company? How does the audit team arrive at the sampling and the basis for arriving at the sampling, basis for arriving at the materiality? How is materiality determined? Is it in compliance with standards on auditing? How is the data analysis done? What is the basis of analyzing the data? What are the conclusions? What are the basis for picking up your samples? All those standard formats, are all those standard formats available? Yes or no? And if it is a yes, then you could mark yourself based on the gradings available. If it is a no, then obviously, and there is a 0 against this. Then firms tools on evaluation of independence of all the engagements, whether the audit firm and the audit team are independent of all the engagements and all the team members are independent. Are there procedures for obtaining annual declaration on independence from the audit teams, including partners and staff? And then are there engagement specific declaration on independence obtained? All these, if all these things are available, then you get a plus. Then engagement withdrawal and rejection policy. Does the firm's audit manual cover as to how to address the situation where the engagement is being withdrawn or being rejected? And then also document the reason, whether there was a scope limitation or whether there was a pressure on the fee or whether there was an integrity with the management issue or owner. So what was the issue? That needs to be well deliberated and thought for and documented. Now, So in the previous slide, we talked about acceptance of a new client. Now, in an acceptance of a new client, does the acceptance checklist cover compliance on the industry knowledge of the client? Does the auditor have enough industry knowledge about the client? Information regarding the ownership and management of the company or the group, then regulatory requirement of the client, financial conditions, emphasizing on the going concern aspect, and specific issues which may be required, which may require a discussion with the previous auditor, and then whether the audit firm has enough bandwidth to serve the prospective client. So these are certain checklists, and this is not sacrosanct. One may want to add more as to what would form part of the acceptance in case of a new client. Moving on, is there a mechanism to measure the service delivery and measure the effort and estimation done by the audit team? So does the firm carry out a capacity planning for each engagement as to how many people would be needed in the engagement? Is there a budgeting process available? Is there a planning done basis number of category of people, number of hours or days or weeks? And then is there an analysis done at the end of the audit where the budgets are compared with actual time spent, and then root cause analysis done in case of a variation? So is there a process demonstrating all this is what the question is. And then this would also entail that there is adequate time recording system available with the company, so that and then for that you would need, the audit firm would need a technological tool to measure the timesheets, to record the timesheets based on the cost centers for each engagement, so that one is able to perform the analytics in terms of budgeting versus actual. And to be honest, this is a very helpful exercise, because then you get to know as to whether you are actually making money in a particular assignment, and would you need to go back to the client and claim for overruns if that is a possibility. And this is my experience, unless and until you ask for it, you will not get it. So it helps in that perspective also. Enough checks on the quality control for the engagement, whether the partner has adequately reviewed, and there is a track available to demonstrate that a partner has reviewed. If it is an electronic file, there are electronic sign-off. Partner can record the time onto their timesheets, whether the quality reviewer was involved, was required to be involved, and was involved, and that is demonstrable on the file. And the checklist also, the AQMM list also suggests that one should record the number of engagements without findings by ICI, if there is a review by the peer reviewer or by the QRB, whether there were any findings, or by the ICI or by the regulators. That needs to be recorded. And does the firm have adequate accounting and auditing resources in the form of soft copies of archives of question and answers? Is there a thought leadership within the firm? Or is there a technical desk available within the firm who's available to guide the audit teams, to share the latest updates in the form of notifications or circulars, and whether the audit team gets adequate knowledge and the training to perform the work on this? Benchmarking of service delivery. Everything is boiling down to benchmarking or grading. Does the firm follow or implement a standard delivery methodology? Is there a standard tool available, like a documentation software, or it could be a manual created tool or a folder where one may want to ensure compliance in terms of completeness of all the areas which have been audited. And also it talks about the number of statutory audit engagements reworked. Now, something similar to what we had covered in the previous slide. and rework could be on account of information insufficiencies or errors or wrong interpretation or provisions. So that also needs to be, is there a mechanism to document that, just to ensure that how accurate we have been or the audit team have been in terms of completing our audit engagements. So so if you look at the crux of it, it doesn't only talk about the plus 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 or the positives. It also talks about where things have gone wrong and whether those have been recorded, and have we learned from those and have we rectified them. This is the kind of theme that is coming out. And then it also talks about there are client disputes, and if there are any disputes, obviously other than the fees, and how those disputes have been addressed. And then so basically, are there mechanism available in case of a dispute? Does the firm have a mechanism to involve the other leaders in the audit firm to ensure that those issues are addressed in consultation with others? Is there a consultation mechanism available? And everything needs to get validated, which means there's nothing called verbal in the auditing world. So everything needs to be documented, minutes needs to be documented, and put it in the files. And then it also talks about the evidences of the audit team's discussions with the management, be it planning discussions, be it bringing them up to speed in terms of the new laws and regulations. So let's say, for example, CARO 2020 would get applicable this year, or a Schedule 3, revised Schedule 3 would get applicable. Have we already had discussions with them? Are management on the same page? What were our issues noted in the previous year, and whether those previous year issues have been addressed by the client in the current year audit? And then there is enough documentation trail available, be it in the form of emails or in the form of minutes of meeting. So that needs to be demonstrated. Client sensitization, I think I just covered this in my previous thing. I'll just move on to the next one. Technology. So we just had a session on technology. That was on cybersecurity or cyber risk from the client's perspective. The expectation here is clear that the CA firms, especially who are doing the audit, should upgrade themselves and adapt themselves to the moving world, which is to upgrade themselves to the technology and adopt the technological advancement in their offices. So it could be, and then these bullet points have been picked up directly from the AQMM model, wherein they're saying that do they have data security model? Do they have internal communication chats electronically? Has the firm automated its office with the attendance register or the leave management registered? How is the storage taking place? Do they have a scanner? Do they have a centralized server, or is it in cloud? Do you have a digital library available? You own it, or you refer it to the ICAI site? How the client interaction taking place? What are the kind of alerts you are issuing? What are the kinds of things available in the website? Do you have a video conferencing facility available? And then do you have your own email domains, and then the usage policy, the antivirus policy? So all these things are primarily, so we may have few of them and not all of them. The idea is to upgrade ourselves and to have all of them. And this in turn will help in updating the technological advancement for the CA firm, which in turn will help in easing out our process of performing the audits. I mean, just a reiteration. So we have a digital competency maturity model version 2, which can be referred to arrive at the technical maturity of the CA firms. It basically talks about the use of audit tools in technology, data visualization, and analytical tool, which is primarily. So all these three will go on to support our audit function at the client's place. And what we saw in the previous slide are primarily for aiding the technology in the office. Revenue budgeting and pricing. Now the code of ethics is the way the current code of ethics is drafted. It says that the client fees from one client should not exceed 40% of the total revenue. And with the new code of ethics, which is currently deferred, this has been reduced to 15%. So we need to ensure that we are in compliance with code of ethics, and we are not running any independence threat, self-review threat, or intimidation threat, or any other kind of threat available in the code of ethics. And then adherence to the minimum fee scale standards recommended by the ICAI for any certificate, and those are good benchmarks if you ask me. And then the fee consideration and scope of services should not infringe upon the quality of work and documentation as envisaged in SQC1. I think we covered this in one of our previous slides, wherein we said the acceptance of the client generally gets compromised because of the low recovery, because of the low fees and all. So it boils down to all of us as a community, wherein we should ask for the right kind of fees to be able to meet the minimum scales of recommended fees by ICAI. And this table is easily available on the website and can be used. And also, if we have the right kind of fees, we will be able to demonstrate and perform our work more diligently without any pressure on the fee recovery. However, the important thing to be considered is from one client, it should not exceed 15%, because otherwise then we run the risk of breach of code of ethics. KPIs for the evaluation of the firm and the partner. Are partners being evaluated? Are there enough measurement yardsticks available for the partners? Is there a decided frequency for evaluation, whether the partners gets evaluated annually, semi-annually, or on engagement basis? That is important. And then the KPIs should generally talk about the quality and the demonstration of the engagement partner services as per the requirements of SQC1. We talked about difficulties of human resources, availability of good quality human resources in one of our slides now, this is now covered in AQMM, wherein do we have processes where the skill sets are mapped with the requirement of the engagement? That needs to be demonstrated in the file. Do we have the methods and tools used by the firm for resource allocation? Do we have a spreadsheet available? Do we have a workflow chart? Do we have a let's say an intranet which talks about how the resources are being allocated and whether a fair allocation is being done? When we say fair, we mean adequate time is being given, neither less nor short, and there is a mechanism to demonstrate that. And is there a mechanism to track the employee activity, which is the resource productivity, like the timesheet, time booking, timesheets and all, and which we touched upon earlier also. It could also help in identifying the overruns in case need be, if the time spent exceeds actual time spent exceeds the budgeted time. Because at the end of the day, if we see, we as chartered accountants have only time to sell. I mean, if you're able to measure it, if you're able to properly budget it and then tally the budgets with our actual, we have a very fit case to ask for the overruns. And then what is the firm should decide on the ratio of staff to partner ratio, partner to manager ratio, and manager to interns ratio, and client to staff ratio. So all these ratio will actually demonstrating that the team has enough time to spend on the client, and hence the quality is uplifted. And then the utilization and realization rate, we talked about that in case of budgets and actuals, and the resource planning. Training is also we all areas should be covered. It could be latest changes in the Companies Act, latest changes in the regulatory environment, or it could be on standards on auditing, or on the auditing tools sitting inside the audit firm, and the frequency, and generally some kind of benchmark, let's say which say X number of hours, let's say 60 hours per employee per year is the basic minimum that employee should undergo the training. And then one could make a specific trainings also available, especially in case of large clients. You would want your teams to be trained on the requirements for SEBI or any other relevant requirement. And then the trainings, how good are people are on using the technological uh, devices like the data analytics tool, or the use of the Excel, or let's say the audit documentation tool if you have any. Things like that is what the expectation of AQMM is. That is, the audit firm has a well documented note available on this, and then there is a compliance available, whether this is complied with or not. Then there are certain advanced technologies like the AI or the blockchain. If which can also be considered as an incremental factor for differentiation purposes. It is only for differentiation purposes. It may not be really relevant as of now, but then special brownie points could be given for the team who understands the AI or blockchain, because at some point in time we also need to upgrade ourselves and start using these in our routine audits. Turnover and compensation. So evaluation of the team composition, as I think we've already covered. How many managers? Is there a adequate hierarchy available in terms of number of managers or assistant managers, or paid assistants or interns? That equilibrium needs to be maintained to ensure adequate review and adequate people on the ground. It also talks about certain statutory contributions wherever applicable. For example, whether the audit firm contributes to the health insurance and other benefits of the people, and are the staff members happy and satisfied? Is there evaluation criteria? Is there a employee survey, or is there a mechanism where the employees are able to raise their concern and voice and suggestion, and those are addressed by the audit firm? So these are the softer aspects which probably we have been missing, or we do not really focus more on. But the AQMM wants, they believe that these things would go on to contribute to the quality of the audit firm, and in turn go on to increase the quality of the audit engagement. So these are the softer aspects, but would need adequate coverage. Again, the focus sets as to how many professionally qualified FCAs are there or ACAs are there. What are the kind of other qualifications obtained by the audit team, whether they have performed DISA or their IFRS. Basic idea is that all these things, all these skill sets are required to be noted and to be graded adequately. KPI, I think this we've covered. We'll move on. Moving on to the third category, which talks about the other areas of practice management, functional in nature. This basically talks about does the firm manage the attributes relating to partners to maintain at the optimum level as deemed fit for respective organization. This basically means that is there an optimum number of partners? Let's say there are 100 engagements, and for 100 engagement there is only one partner. This is not optimum. So that optimization needs to first be documented by the audit firm as to what do they believe would be the optimum maintenance of optimum level maintenance, and whether that is fulfilled. And also it should also talk about whether there is a good mix of experienced partners versus the new partners, and what is the policy where the people would be upgraded to a partner level, and then it also talks about the compliance with the ICI code of ethics. What is the partners and the firm's strategy towards the compliance with the code of ethics and all. And is there a whistleblowing policy? I think we talked about in one of the slides where we said that there should be surveys and all. So along with that, is there a whistleblower policy? Now, this is extremely important, and what we have seen from our experience is that we actually get to know a lot of things as to what's happening within the firm if we have this policy. So certain infrastructure and physical needs, obviously with this corona times, the infrastructure need in terms of the laptops or computer softwares and also that has gone up, whereas the need for the physical offices and the other furniture and fixtures, that has generally dipped. So there has to be an adequate policy in terms of branch level activities, what all activities are centralized, what all activities are decentralized, how is the invoicing taking place, how is the payroll processing taking place, how are people managing from home, what are the kind of security threats, what are the kind of bandwidth requirements are there for remote working. So these are again, very practice management, softer aspects related things, but all these needs to be first considered that these are issues. B, it needs to be a policy needs to be drafted, and C, compliance needs to be tested for this. And then, what kind of credentials the firm has. Is the firm a peer-reviewed firm? Peer review is gaining importance because without a peer review, one is not able to perform the listed company audits or be part of the IPO process and all. Is the firm impaneled with CNAG and RBI or any other statutory body? Does the firm hold any ISO certification or standard practice being followed? And are there any, let's say, negative remarks or blacklisting or debarment from any government bodies? If that is there, then that needs to be evaluated and that needs to be worked upon, and any negative assessment report by the quality review board. So all these things needs to be addressed. It can't be put under the carpet. That there has to be a policy for that. It needs to be addressed as to what were the reasons, and whether those quick fixes have been considered or no, and whether there is a case of professional misconduct as part of the member firm, and if a member is found guilty, what are the adequate actions being taken by the firm. So there has to be a documented policy, and nothing should be left in air as to we'll see when things come up. I don't think that will really help anymore. So way forward, clearly this is something which we experience day in and day out, and quite honestly, this is an excellent step. This is like a wake-up call for all of us, and we should honestly and earnestly do the self-evaluation for ourselves and for our firms, and then try and improve onto the areas, because now we know, after this assessment we would know as to whether we are in level 1, 2, 3 or 4, and then basis the shortcoming we should try and improve, because this will act as a guide which tells us as to what needs to be fixed. And again, what we believe is that more and more people are involved in this process is the more correct version of your output you would be able to see, because at the end of the day, improvement in quality is something which is a continuous process, and it is not a destination. It's a journey which needs to be done continuously. Happy to take questions.
Sir, there are 2-3 questions.
Yes, sir.
Can you hear me, sir? So
first one is,
Sir, is there any MS Excel version available for the AQMM?
I think it is available, but even if it is not available, the versions could be easily converted into Excel. That should not be a problem. But I think it is available.
Okay. So one query is regarding the we should consider indicating in the engagement letter about audit quality maturity medal in the same lines as of the peer review.
Yes. So AQMM basically talks about as to what should be done to get a good score in the AQMM score, and the templates are in any case available in the relevant standards on auditing, which should be used. This is what is advised.
Sir, during the current COVID scenario, where physical presence may not be possible during audits, does extra attention need to be given to the quality of audits and how?
Oh, very relevant question, I tell you. So, and you would have seen that probably in last 2 years or so during COVID, the number of fraud cases have also really increased. I mean, you could see it in the newspapers, but otherwise also being in the auditing fraternity, we see the cases have gone up, which means that we as auditing community needs to be far more alert and agile and be more professionally skeptical in terms of our audit processes. So I think we should increase the let's say the audit checks. I'm not saying you increase the sample, but I'm saying the corroboration checks should be increased. Let's say, for example, if you are auditing in a home environment where things are put up on the OneDrive and then you are witnessing the scanned documents and all, as an additional check, make sure that someone visits the office at some point in time to do a test check on the scanned documents also. So this was just one of the examples. One needs to be wary of the fact that the frauds have increased and the responsibility cast on us should also increase. So even if there are additional checks which we are doing, we have to do. So there could be many, let's say, another area, another audit program could be where you pick up things under unpredictability. Let's say, for example, small value samples where client may not be anticipating that the audit team would pick up small value samples, and then have a look at the original documentation for that. So things like that, we have to think out of the box and see what situation would put best for in your environment. But a good question.
Ji sir. So one more question. Going forward, can the potential client ask the audit from this AQMM rating and decide that they may not want to work with audit firms that they are lower level free?
This is the future. This is the future because I mean, this is just the first year of AQMM version 1. So this will become more popular, and the clients would finally ask for the ratings that probably we give ourselves in this. So you are absolutely right. This is here to stay, and indirectly this would act as advertisement for which would speak about the quality of the firm indirectly. And as we covered in one of our slides, we can't put it anywhere, but the popularity will be sky high in 6 months time to 1 year. And the moment it becomes mandatory, you wait and see. This is going to increase.
So thank you so much, sir. These were the few questions for you regarding the AQMM, the audit quality. It was a wonderful experience to have you over here regarding this best quality, audit quality check as well as regarding the AQMM. And thanks from the core of my heart and on behalf of CNQ of ICI for sparing your valuable time. Thank you so much, sir. Thank you so much for the wonderful time. Thank you, sir. Have a good one. Thank you, sir.